Good evening. This is Duane Lowry for the DPP Grain Desk on Monday, February 18th. Markets will open at normal times tonight. Initial focus probably will be South American weather. Some people will talk about Argentina's weekend moisture being less than expected, which is a factual reality. But I'm not sure how much of a lasting market impact that it's going to have. The U.S. Midwest and Plains have moisture opportunities in the 1 to 5 day and also the 6 to 10, favoring central southern plains. Much of the Midwest will see precip over the next 2 weeks. That's going to cause some people to want to focus a little bit on new crop. USDA is also having their annual Outlook conference in D.C. this week. Friday we get their first look at the 13, 14 new crop S&D tables. Everybody will expect it to be some flavor of bearish, large supplies, 2 billion corn carryout, a couple hundred million bean carryout or more. So the trade will be anticipating a bearish theme to the Outlook conference when it comes to looking at new crop. But there again, there's no real surprise there. Last week's price action was very good and cleansing and thorough in its cleansing. So from that standpoint, we can believe that last week's lows in all of these markets represent something close to real value, limited additional downside potential below last week's lows. In the case of wheat, probably very little chance that we're going to go down and push below last week's lows, and if we did, it'd be minimal. But I doubt if that even happens in wheat. Wheat traders are also optimistic that we're going to see an improvement in global demand start to surface. So I think while on one hand some people will talk about increased moisture in the plains as being bearish, other people will talk about improving demand. I think the market in general is going to find some stabilization here. Technical conditions for wheat will encourage buying interest to surface on small weakness below Friday's close. So in general terms, wheat will be well supported. Whether or not it rallies very much will depend on how row crops are handled. I'm a little bit concerned corn and beans may struggle a little bit this week. Not that we have a lot of downside risk, but we may just struggle and pause and consolidate before we can try to recover from losses over the last couple of weeks. Corn has little for news. The focus will be on the USDA's annual Outlook conference and bearish expectations of data there. Midwest moisture probably get a little bit bearish slant. Right or wrong, traders are very demoralized about corn. A lot of people got beat up with the recent decline. I think that last week's lows, if they're not the final lows on this particular phase, they're very close to the final lows, and you're not going to be able to build any sustaining, new momentum down below last week's lows. Even new crop values finished at in the low 560s on Friday, and could we go down to 550? Yes, but there's not going to be any appreciable move in new crop futures below 550 at this time. There's still a certain amount of uncertainty on acreage and respect for weather, dry soils, etc. So I think there's limited downside risk here in corn. But the overall flavor of this week having bearish fundamental new crop focus to kind of work through and absorb, possibly still some liquidation pressures, technical conditions that are supportive from the standpoint that we found stabilization and we're going to continue to find stabilization. We may still, part of that stabilization process might still be to test or probe last week's lows again. So that seems like it's somewhat of a limiting factor from the standpoint of limiting to suddenly transition to some sort of a rising market trend. As far as soybeans are concerned, they'll initially get a boost on ideas Argentina was a little drier than expected over the weekend. I personally don't think we're trading South American weather. We're talking it, but I don't think there's a direct connection that you can, clearly and concisely and consistently attach weather forecast changes to day-to-day price action changes. The soybean market suffered liquidation pressures last week. Again, I think that was pretty thorough. But you've also got a sector of the trade that's been willing to be short the bean market and still willing to be short the bean market. And so if there isn't an initial upshot in beans on disappointing Argentine weather, and if there is, I think it's somewhat minimal. But if there is, I think that you've got a sector of the trade that's willing to trade beans from the short side. Here too, the annual Outlook conference from USDA will offer a bearish slant to new crop balance sheets, and I think that you're going to have a week that's going to be kind of largely dominated by disappointment, discouragement, bearish new crop themes, and it's going to be difficult for the market to immediately reverse the losses that we've had the last couple of weeks. That said, soybeans as well should continue to find stabilizing price action like we found late last week. Any test or probe of last week's lows, which is possible, is going to lack any ability to build sustaining downside momentum. And in general, we're going to try to consolidate and kind of hold the markets together here this week. Looking ahead over the next several weeks, couple of months, I think there's good upside potential in wheat, corn, and soybeans. There's going to be always new crop uncertainties. There's going to be some acreage uncertainties. There's going to be still have potential for logistical problems in South America, and we still have a very solid old crop corn tightness, fundamental support to impact corn, and you still got a tight old crop situation in soybeans. So there's plenty of reasons not to get overly discouraged. There's plenty of reasons that while you can focus on new crop and be bearish, it doesn't mean that we have to continue to go lower than what we've already done. A lot of this has been absorbed. So look for the markets to try to stabilize this week. Any test of last week's lows or probes of last week's lows, which are possible, shouldn't be able to build any sustaining momentum. And we got a better outlook for prices over the next 6 weeks to 2 months. The other one thing I would caution about this week, I'm still a little concerned that the outside markets are poised for weakness, and I think that might also be a drag on the grain trade to kind of thwart any type of early wheat strength that we might start out with. For the DPP Grain Desk, this has been Duane Lowry. Thank you.